It is the first week of January 2026. Margaret, a 72-year-old widow living in Ohio, walks slowly to her mailbox. Her hands are cold, her heart is pounding, because today is the day her new, bigger Social Security check is supposed to hit her bank account. She has been waiting for this raise for months. The news said seniors would get a 2.8% increase. She did the math on a napkin at her kitchen table. She told her daughter, "Finally, a little breathing room. Maybe I can afford my heart medication without skipping doses again." She walks back inside, sits down at her old wooden desk, and logs into her bank account. And then she freezes. The number on the screen is not what she expected. The raise is there, but it is much smaller than she was promised. Almost a third of her increase has vanished before it ever reached her account. She blinks. She refreshes the page. She calls her daughter, her voice shaking. "Did the government take my money? Did somebody steal from me?" "No, Margaret, nobody stole from you, but something did happen that nobody warned you about clearly enough. And tonight, I am going to explain exactly what it is, why it happened, and what you must do right now to protect every single dollar you have left." I am June, a senior policy analyst here at Retirement Tax and Law Pro. For years, I have helped retirees just like you cut through the confusion of Social Security, Medicare, pensions, and government rules that change every single year without warning. In the next few minutes, I am going to show you the exact math behind your 2026 Social Security check. I will reveal the official rule that decides how much you actually take home. And most importantly, I will share 3 steps you must take this month to make sure you do not lose another dollar. But please, stay with me until the very end. Because there is one hidden mistake that millions of seniors are making in 2026. A mistake that can cost you over $8,000 per year if you ignore it. I will reveal that trap near the end of this video. So please take a deep breath, get a cup of tea, and let me walk you through this calmly, step by step. Let me first tell you about Robert. Robert is 67 years old. He is a retired postal worker from Pennsylvania. He worked hard his whole life. He paid his taxes. He never asked the government for anything he did not earn. In October of 2025, Robert heard the announcement. The Social Security Administration officially declared a 2.8% cost of living adjustment for 2026. Robert was relieved. His average benefit was $2,015 per month. With the 2.8% raise, he expected to receive $2,071 starting in January 2026. That is $56 extra dollars per month. Robert did what many seniors do. He planned around that $56. He told his wife they could finally afford to turn the heat up a little higher this winter. He budgeted for a small grocery increase. He even set aside a few dollars for his grandson's birthday gift. But when his January check arrived, Robert only saw about $38 more, not $56. He thought there was a banking error. He called Social Security and waited on hold for almost 2 hours. The representative finally explained the truth to him. And Robert was stunned because Robert had made one small mistake. He forgot to account for Medicare Part B. You see, friends, here is what really happens in 2026, and I want you to listen carefully because this affects nearly 71 million Americans. The Social Security Administration confirmed on October 24, 2025, that the 2026 COLA is 2.8%. That is real. That is official. That raises the average retired worker's benefit from $2,015 to $2,071 per month. A widow's average benefit goes from $1,967 to $1,919. A disabled worker's average benefit goes from $1,586 to $1,230. But at the same time, Medicare did something else. The standard Medicare Part B premium jumped from $185 per month in 2025 to $202.90 in 2026. That is an increase of $17.90 per month, almost 10%. And here is the part most seniors do not realize. That premium is automatically deducted from your Social Security check before it ever reaches your bank account. So let us do the simple math together. You get a $56 raise. Medicare takes $17.90 of it. You actually keep about $38.10. That is roughly 68% of your announced raise. The other 32% disappears into Medicare before you ever touch it. And it gets worse. The Part B deductible also went up. In 2025, it was $257 per year. In 2026, it is $283. That is $26 more you must pay out of pocket before Medicare even starts paying its share for doctor visits and outpatient services. Now, you may have heard about something called the hold harmless rule. Let me explain it in plain English. The hold harmless provision of the Social Security Act says that if you have your Part B premium deducted directly from your Social Security benefit, your net check cannot go down from one year to the next because of a Medicare premium increase. About 70% of Medicare enrollees are protected by this rule. But here is the catch most seniors miss. Hold harmless does not stop premiums from rising. It only stops your check from going backwards. Since the $56 raise is bigger than the $17.90 premium hike, hold harmless will not be triggered for most people in 2026. You will pay the full $202.90. And hold harmless does not protect everyone. It does not protect you if you are enrolling in Part B for the first time in 2026. It does not protect you if you are a high-income beneficiary paying IRMA surcharges. It does not protect you if you pay Medicare directly instead of through Social Security deduction. And it does not protect you if you are a dual eligible whose state pays your premium. Now let me tell you about the trap that Robert almost fell into next, because this is where things get truly painful. Robert sold a small rental property in 2024 to help pay for his wife's surgery. That sale gave him a one-time income boost. He thought nothing of it at the time. But in January 2026, Robert received a letter from Social Security. It said because his 2024 modified adjusted gross income was above the IRMA threshold, his Part B premium would no longer be $202.90. It would be much higher. This is what is called the Income-Related Monthly Adjustment Amount, or IRMA. If your 2024 income was above $109,000 as a single filer or $218,000 filing jointly, you pay an additional surcharge on top of the standard premium. At the highest income tier, the Part B premium can climb to $689.90 per month. That is more than $8,200 per year, just for Part B. And here is the cruelest part. IRMA uses a 2-year look-back. That means your 2026 premium is based on your 2024 tax return. Many seniors had a one-time income spike in 2024 from selling a home, a Roth conversion, a required minimum distribution, or an inheritance. They had no idea it would punish them 2 years later. But there is a way to fight back, and most seniors do not even know it exists. It is called Form SSA 44. If you experienced a life-changing event, such as retirement, the death of a spouse, a divorce, the loss of a pension, or work stoppage, you have the legal right to file Form SSA 44 and ask Social Security to reduce or remove your IRMA surcharge based on your current income, not your 2024 income. This single form has saved retirees thousands of dollars per year, but it only works if you actually file it. So now you understand the picture. The 2.8% raise is real, but the take-home is much smaller than it appears. And for higher-income seniors, it can vanish completely. Let me give you 3 exact steps you must take right now to protect yourself in 2026. Step number 1. Log into your official My Social Security account at ssa.gov today and check your January 2026 benefit statement. Look at the gross amount. Look at the Medicare deduction. Look at the net deposit. Compare it to your December 2025 check. If anything looks wrong, contact Social Security immediately. Do not assume the system is correct. Errors happen, and catching them early protects you. Step number 2. If you had any unusual income in 2024, a home sale, a Roth conversion, an inheritance, a one-time bonus, or a large retirement account withdrawal, watch your mail closely for an initial IRMA determination notice from Social Security. If you receive one and you have had a life-changing event since 2024, immediately download Form SSA 44 from ssa.gov. Fill it out carefully. Attach proof of your life-changing event. Mail it or bring it to your local Social Security office. You have the legal right to appeal, and most seniors who file this form correctly win their case. Step number 3. Review your annual Notice of Change letter from your Medicare Advantage or Part D drug plan. This letter arrives every September. It tells you exactly what is changing in your plan for the next year. If your Medigap or Part D premium is rising 15, 20, or even 25%. You have a legal window to switch plans during Medicare open enrollment from October 15 to December 7 every year. Miss that window and you are locked in for the entire year. Also keep in mind, switching Medigap plans outside your initial 6-month enrollment window can trigger medical underwriting in most states, which means you can be denied. So plan carefully and never let open enrollment pass without reviewing your options. Now, my friends, here's the most important thing I need you to hear tonight. The rules are changing faster than ever. Medicare premiums are rising. IRMAA thresholds are shifting. Hold harmless protections do not cover everyone. And the government does not always send you a clear, simple letter telling you what to do. By the time most seniors realize what happened, the money is already gone. Please do not rely only on YouTube notifications to stay informed. YouTube does not always show you my videos when new rules drop, and by the time you see them, it could already be too late. So here is what I want you to do right now. Click the link in the description below this video and join the Global Senior Alerts official WhatsApp channel. It is completely free. The moment you join, you will be able to download our Senior Benefits Protection Guide at no cost. This guide walks you through Social Security rules, Medicare deadlines, IRMAA appeals, pension protections, banking safeguards, insurance claim tips, and travel rules for seniors, all in plain English. You will also receive real-time alerts the moment any new rule is announced that affects your Social Security, your Medicare, your pension, your bank account, or your travel rights. No waiting, no guessing, just clear, calm, accurate information delivered straight to your phone. Margaret did not know about her real take-home until it was too late. Robert almost lost thousands until he learned about Form SSA 44. Do not let that be you. Click the link in the description. Join the Global Senior Alerts official WhatsApp channel today. Download your free Senior Benefits Protection Guide and give yourself the peace of mind every retiree in America deserves. I am June with Retirement Tax and Law Pro. Thank you for trusting me with your time tonight. Stay informed, stay protected, and I will see you in the next video.